Buckle up. Ray Dalio, founder of one of the world's largest hedge funds, just said it's time to steer away from debt assets like bonds and debt and have some hard money like gold and Bitcoin. And Ray is definitely onto something. Highly likely he knows what's coming, and we can see the global money printers are firing up. And if you like 100K Bitcoin, MicroStrategy chairman Michael Saylor says you're going to love $13 million BTC. We have some insane numbers from MicroStrategy and the ETFs, and they're showing us that the mother of all supply shocks, it's here. And Bitcoin is set to go absolutely ballistic. I'm Rustin, head of news at Simply Bitcoin, and nation state FOMO has arrived. Are you ready? Well, good, because it's time to send it!
Cash is trash. I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard.
I think we're entering an era where there's going to be a competition of monies because of the printing of fiat money, and Bitcoin is part of that competition. But there'll be many monies, not just crypto monies. There'll be central bank crypto monies.
I think it's been, quite amazing that for 12 years it's accomplished it. But I think it has no relation to anything. People are going to start to say, where is my safe storehold of wealth? And so I think the question over the next number of years is really, what is money, not just as a medium of exchange, but a storehold of wealth.
Man, Ray was a hater for so long, but he has come around. Check out this quote. I believe that there would likely be a pending debt money problem. It is impossible for these countries to be able to not have a debt crisis in the years ahead that will lead to a great decline of money value. Let's see if Ray is right. Check this out. 62.5% of the personal income taxes you paid to the federal government last month were for the interest on the debt, not for roads, not for bridges, not for schools, not for hospitals, not for the military, and not for Social Security, just interest on the debt. And like we said, the global money printers are firing up. The ECB set to announce a rate cut as its target and the economy are faltering. And despite the last few meetings, they're talking about, are we easing fast enough? Bullish. And they're not alone. China, the US, everyone is coming to the Fiat debasement party. And it is coinciding with nation state FOMO. Roll it!
Fear of missing out has reached the nation-state level and the sovereign wealth fund level, central bank level, and it's the same on that level as it is on any level. There's I think Warren Buffett said once that people are not that interested really in making money until their neighbor starts making money. And then suddenly, it's keeping up with the Joneses. So the fact that a couple of countries are now stacking and showing great results as a result has triggered FOMO at the highest level. I remember when I did a .com company in Los Angeles back in the late 90s, and we got a huge investment from NBC. And I asked one of the executives, why did you invest in my company? And he said, to tell you the truth, I don't know, but I don't want to miss it. And that was the mentality at that time. So we've entered that phase of the cycle where people are just going to be writing enormous checks because they don't want to miss it. And we'll take the money.
More big news out of El Salvador, bullish, as they're eyeing partnerships with 25 plus nations after signing a mutual agreement with Argentina to boost the, quote, digital asset industry. We know where El Salvador stands on this. They're maximalists. Pay attention because the stars are aligning. Now let's get to the mother of all supply shocks. Record lows of Bitcoin available on exchanges. And this is running into demand that is insane and only accelerating. Check out this clip. Roll it.
We took 30 years to accumulate $500 million in capital, which we invested by October of 2020. We took 4 years grinding away through the crypto winter to find another $10 billion of capital to invest in Bitcoin. And then the next 4 weeks of November, we raised $13.5 billion of capital. So, and in November, we bought nearly 150,000 Bitcoin.
What was your biggest slug of Bitcoin ever added?
There were 15,000 Bitcoin mined in the month of November. When you start to work through the math of what's going on here. This is a global monetary asset. It is worthy of attention.
Do you see what's happening? Only 450 Bitcoin mined per day. US Bitcoin ETFs going bananas. MicroStrategy, there's no stopping that train. Marathon is in. The Bitcoin standard is going viral riot. And it is becoming, just with GigaChat alone and MicroStrategy, demand is outstripping supply.
MOS.
The Bitcoin ETFs have surpassed 500,000 BTC. It's the fastest growing ETF in history, and it's only accelerating. Shit. I don't know, guys. It might be a bubble. Roll it!
Everyone goes, Bitcoin is a bubble. It's tulips. The bubble in tulips in Amsterdam in 1630. That bubble in Amsterdam, where is the center of the global flower industry today? It is in Holland. The Netherlands has been the center of the global flower industry for 400 years. That tulip bubble brought 400 years of prosperity to Amsterdam. So to call it tulips is actually a compliment, not an insult. And then you go, what is a bubble? A bubble is a bull market in which you don't have a position. It is a psychological way of justifying that you didn't invest in something to call it a bubble. So you can call it a bubble and you can dismiss it. But the potential of Bitcoin to be the default cash system of the internet and the default savings vehicle of the internet is so extraordinary, I would argue that the risk is not owning Bitcoin, the risk is not owning Bitcoin. Everyone should have an allocation in their portfolio. And don't try and use the fact that I don't understand it as an excuse. Because most people don't understand how the combustion engine works, and they still own a car. Most people don't understand hypertext transfer protocol, and they still use the internet.
Look at the numbers, read them and weep. Bitcoin is attracting $80 billion every month. Nearly half of the capital that has entered the Bitcoin market over the past 15 years was added this year. And check this out. It's just becoming the norm now. Billionaire Thomas Peterfly, founder of Interactive Brokers Group, says, quote, I would recommend that people put 2% to 3% of their net worth into Bitcoin. Well, do you know what GigaChad has to say to that? You're not bullish enough, and diversification is a scam. Roll it!
I think that if you read an entire book of investment advice or financial advice, you don't want someone to end the book saying, I don't have a solution for 98% of your problem, but here's an insurance policy. 1 or 2% is like buying an insurance policy, but 20, 30, 40%, 50%, 75% is like solving the problem. I don't think you're going to come up with 50 good ideas. The whole idea of diversification makes sense when you don't know the answer, but you don't want to make a mistake. But I think in the field of engineering and in many fields in life, it's like when your kid is a good basketball player, you don't say, I think you should split your time between archery and jogging and swimming and basketball and football and hockey and 16 other things just in case. You tell them to focus on basketball, and you build the plane out of aluminum, and you don't diversify the steel beam into clay and bronze and balsa wood. If there's an answer, there's an answer, and you just tell someone the answer. When you don't know the answer, you're like, yeah, well, go to Vegas and gamble and pick anything, but don't bet more than 2% of your money. So my point really is there's a disconnect between giving someone a piece of advice to make their life better and then saying, but I 98% don't believe in it. I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class, right? My forecast is 13 million a coin by 2045, base case, upside and downside. It's 60% ARR at 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15. Over 20 years, it'll just step down as it approaches that target.
Okay. Now we have more evidence that both Dalio and Saylor are right. We got a little history of fiat and just how fooked the US dollar and the US debt spiral are right now. But before we bring it home, look at our likes.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Hey, enjoying the show so far? Don't forget to like, subscribe, give us a pamp, and spread that sound money gospel. While we take a moment to recognize our sponsors, the masters of Bitcoin self-sovereignty, the Bitcoin way. You're looking to learn how to Bitcoin, how to properly secure your Bitcoin? You might want to head on over to the newly revamped Bitcoin Way website where you can begin your road to Bitcoin sovereignty today. If you're looking to schedule a free 30-minute consultation, go ahead and use that link below in the show notes. Big finish time. Now, what is the fiat endgame? Well, when the music stops, it always seems to sound the same. Weimar Republic, Germany, 1921. Germany's currency collapses. Bread prices double every few days. Kids make kites out of cash because the money's worth less than the paper it's printed on. 1946, Hungary. The Pango tanks, salaries paid multiple times a day because waiting till tomorrow means your paycheck buys nothing. Brazil, 1987. The Cruzado crumbles. Supermarkets hire people to change price tags hourly. Shoppers abandon carts mid-aisle when their cash loses value before checkout. Yugoslavia, 1994. The dinar, worthless. People haul bricks of cash just to afford a single meal. Prices double every 34 hours until there's nothing left to price. Ecuador, 1999. The currency dies and a kilo of rice costs 1 million sucres. The government ditches its currency altogether, surrendering to the US dollar. 2008, Zimbabwe. $1 trillion bills can't even cover bus fare. Street vendors charge by the minute because waiting means being paid less than nothing. Venezuela, 2015, the Bolivar crashes, the government slaps sovereign on the name. It's not sovereign, and it's not worth much of a Bolivar either. 2019, Argentina, the peso implodes, citizens flee to Bitcoin to escape capital controls. The black market dollar rate doubles the official one. I think you guys remember this absolute chaos. Lebanon 2020, the pound collapses. Banks locked their doors and seized people's savings. Bitcoin ATMs pop up as lifelines in a system that was just too corrupt to fix itself. 2022, Sri Lanka, the rupee crashes. Citizens storm the president's mansion. He flees. Families are left begging for food in the streets. Nigeria, 2023, the Naira nosedives. People stand in ATM lines for days for cash that just isn't there. But Bitcoin keeps businesses alive while fiat fails. The truth is, fiat collapses aren't fairy tales. They're warnings. Bitcoin isn't a hedge. It's an escape plan. It's the lifeboat they don't want you to board. They want you stuck in this. After just 2 months into fiscal year 2025, the U.S. has already raked in a $624 billion budget deficit. It also just happens to be the worst start to a year on record. But as we covered yesterday, Bitcoin strategic reserves are going global. And spoiler alert for the regarded bears, a strategic Bitcoin reserve doesn't bail out crypto. It bails America out of the debt spiral.
Who knows, maybe we'll pay off our $35 trillion, hand him a little crypto check, right? We'll hand him a little Bitcoin and wipe out our $35 trillion.
Hey, hope you guys enjoyed this one. Don't forget to like, subscribe, give us a pap, and spread that sound money gospel. You want to keep the bullish party going? Well, click here, and I'll catch you all on Monday. New episodes of Bitcoin Simply with Dante are coming your way, so stay tuned. Love you guys. Hope you have an amazing weekend. Peace.
If you prefer to go down with the ship, you.